May profits be upon you. Welcome to another weekly Forex forecast. We're looking at the Euro USD. The Euro USD. All right. First thing we're going to do, take a look at the economic calendar. There is no Euro USD Euro news, but there's plenty of USD news. All right. Nothing happening. No red folders on Monday, Tuesday, Wednesday, Thursday. The time you want to get those trades in. All right. We have some good juice coming in. JOLTS comes in, some CPI for the Swiss and employment numbers, ISM, PMI stuff for the USD. And on Friday, though, that's why I'm saying Tuesday, Wednesday, Thursday is the time to get your trades in, because Friday, that is non-farm employment change. All right. Non-farm payroll is a high impact news event that could reverse the market potentially. So just be clear of that. And the best time to trade on NFP Fridays is after the news. Okay. Uh, Up until that point, there's going to be some manipulation going on. Fade the news, and you'll be in a better position. All right. Now, Euro USD. If you haven't already checked out the USD US dollar analysis I did, make sure you go check that video out. I'll make sure I leave a link under this video. All right. But what you can see since the 70s, the euro has been making peaks and lows, peaks and valleys, really. High, higher, higher low, higher high. Ha ha! This higher high came in 2008. All right. And then we started making lows. Lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Not quite a lower low. No, it didn't break that low, but it did make a lower high. And it did break that low. Finally, boom, right? That's very bearish. We've been bearish since 2008. Look at that trend line. Pretty good, right? Now, because I'm pointing that out because every time uh, we peak, we fail to break out the high. We fail to break the high. We go lower. We go lower. Woo, bam, we go lower. Breaking structure. All right, breaking structure. What are we doing over here? Are we going higher or lower? This pull up makes you think, oh, we're bullish. The what do you call it? The momentum is bullish. We should be looking to take buys. All right. It has been bullish since January. Cool. That's a fact, and we did get a bona fide break of structure here. All right, leaving behind an area of fair value for price to come and tap into and maybe go higher from. But here's the deal. Here's the deal. Every time we peak, we fail. We have a swing failure that fails to take out the previous high. And we've been doing that since 2008, not since January. Okay. And we're at another peak. Who's to say that we're going to break these highs with this movement, with this bullish leg? Who's to say we're not going to break those highs? If we're looking at history, we might be thinking, hey man, there's a good chance that we might go down. Look at this. Look at this trend line. That's just showing you where price is in the structure. All right, and uh, it gives you some food for thought. Now, the last bearish leg I'm looking at right here. This is the last bearish leg that we've had, ending in September 2022. All right, and then we started to correct this bearish movement, and that bearish correction, I mean that correction to this last leg is here now. All right, we're at the 786 Fibonacci retracement. This is the last area. When you start getting price closing above this last line, it's usually because it's heading towards that last high. Got it. So we're on, you can say we're on our way, or this might January, the last bearish month that we've had inside of the last 7 or 8 months. We've had one bearish month, and that was July. And could this signal that the market might be getting ready to turn over? Well, it's something to consider, and I am most definitely considering that now. So where are we on technically on the monthly? Where are we? Are we bearish or are we bullish? You can say we've been bullish for the last 7 to 8 months, but this is the until price breaks this high or breaks this low, uh, this bearish leg, which is the last break of market structure that we had, that we're bearish in the higher time frame. This could signal that this correction is over and that we may be on a bullish trajectory from here. But this is an internal break of market structure, an IBOS, if you will, an internal break of market structure, because we haven't gone past the low or the high established with this last bearish leg. I hope you understand that technical the technical aspect of the structure mapping I'm giving. All right, so but we have some bullish momentum that we have to deal with. Let's go to the weekly. And what we can see on the weekly is the bulls are defending. You can tell what I mean by that is these wicks. The market pushes down, and then the buyers are defending from below, and you can see they're pushing price back up. They keep pushing price back up, and that's an interesting dynamic now, isn't it? I'm looking for, when I see big wicks like this, I don't want to see price close below that low. So I know that price is heading up higher. All right. But we're not making new highs, are we? We're not making a new high. We haven't made a new high since June. So this was the high of June. We haven't made a new high since. And this last weekly candle took out the low of the previous candle and pushed up higher. But it didn't take out that high. I think that we're going to see some follow through to trade towards that high. I think it's going to go higher before it goes lower. We may even sweep that high. We may sweep this high. But I think this high is what's going to tell us. Right now, this is consolidation, man. And we are in this consolidation, and that's what you would typically see during the summer. All right. I'm looking for a breakout. I'm looking for a breakout, either above or below, but I'm looking for a breakout. This one faked everybody, pushed up back into the consolidation range. And I'm wondering if we're going to see a breakout higher or a fake out higher. And then we're going to come back and sweep this low and these lows back to this low. I don't know. We're going to see. Let's take it step by step. Now, I'm going to give you the map right now. If this, then that scenario. Okay. You can see that this correction, a push down from the highs, a corrective move. It did not take the high out. It made a lower high. And then price turned over and we broke structure to the downside. We are bearish, right? And then we get this quick recovery. Boom, boom, boom. Right into this bearish fair value gap. And this is where we have been dwelling all summer. All right. And once we came in here at the beginning of August, we stayed here the entirety of August. I'm looking for the breakout, the summer breakout. I'm looking for the fall breakout, really, the autumn breakout, if you will. All right. And you can see these candles are moving higher, even though Monday last week we had this bearish candle. I thought we was going to get that bearish move to the downside. back to this low. I thought that was coming, but the market pushed back into the middle of the range, and that's where we are right now. It's not a great time to try and predict which way we're going to go. This is what you do. You say, if the market takes us and trades into this high and closes above that high, stop looking for shorts. Don't be looking for shorts. Don't stop it. All right. If we trade past this high, all right, that's at 1.1830. All right, 1.1830. And this one is at 1.1788. All right. If we reach, you see the market moving up here, and we close past this high, we're probably going into this high for, that's the first thought you have to think of. But you, at this point, you cease looking for those shorts. Stop. All right. And until we get a very definitive break above this high, until we get a candle close, a candle body close above that high, stop looking. We can be looking for the market to set up something for a sweep of sell side liquidity, maybe into sorry, I didn't mean to do that, maybe into this low, and then we can start looking for the market to push back higher. All right, but once we go past this high here, once we close past that high here, all longs, we're looking for nothing but longs. This one here, we stop looking for shorts. This one here, we start looking for longs. Got it? But we have to see a candle body close above those highs. Right now, we're at an area that is in correction territory. This is the impulsive move. This is the corrective move back. And we're looking for that correction to end before we see another move to the downside, because this is the one that caused a market structure break. All right. We break past this one. We know it's all shorts, and we're going for this low resistance liquidity over here. Okay. These are the draws, the buy side draws on liquidity. All right. Now, if the market decides it wants to wick past those, and we see a candle body close back within the range, for sure, for me, that is a signal that we're probably going to go lower. But I want to see a break of market structure that confirms that before I start jumping into shorts. I hope you got everything I just said. If you have any questions about it, make sure that you leave it in the comment section. Don't forget to hit the boost, and make sure you review my breakdown, my analysis of the US dollar coming up for this week. I'll see you in the next video, and thank you for watching.